All right, everyone, welcome back for another episode of Carnivore Trades. Today is Friday, February 25th, 2022. So we got the follow through here on the spiders that we talked about yesterday potentially happening. We needed to see some follow through. S&P up 2%, NASDAQ up 1.4 right now. I wouldn't have ruled out, one of the things I was maybe leaving on the table today was a possible back check to 420. So maybe testing this tail low and then kind of, maybe a hammer candle or some type of a bullish candle. But, we gapped right up, had a little dip in the morning, and then pretty much straight up all day long. So it's just been short covering really the whole day. And the reason for that is kind of banks and energy starting to get a bid here. And they've picked up the slack. So the NASDAQ obviously lagging today, although the NASDAQ was the leader yesterday, up very much compared to really all the other indices. You can see some stocks like Netflix today that was up big yesterday, just fractionally higher. Facebook, same kind of deal, is up 1%, but 1% for considering the move that it's had recently is not a very big move. Tesla was a bit of a laggard today, up fractionally. So some of these stocks that got a big move yesterday, and it's not uncommon to see a pause like that in some of these names. A big winner on the day in tech land was Square, or I should say Block. Up over 25% here on earnings. That helped out stocks like PayPal. That is up about 5.5% right now. Etsy also had a really big day. Etsy up 16% right now. Huge, humongous move there. Heavy volume. So, and again, we talked about this lately. Once these stocks, once these beaten down stocks, the Affirms, Roblox, Roku, once these stocks have, find their footing, they're going to get massive bounces, and we're seeing that right now. And obviously Square's earnings helping some of these names here, but really just getting that tough pill out of the way, the invasion, I think really just kind of, it was, like I said yesterday, is the market swallowed that final pill, and now it's like, okay, now it's out of the way a little bit here, so we can get some relief rallying. So let's talk about this. I don't necessarily think the market's out of the woods, however. So Spiders up 2%, nice follow through day, humongous move here. I do think we are coming into a bit of a sell zone, or at least a supply zone. So I think if the market's gonna do anything here, it's probably gonna need to do some backing and filling. If we look at a 4-hour here, you can kind of see this is right where we broke down. You have this little pivot here, which we got through, but these this low candle here and this kind of choppy area, that's going to be resistance. You got the 50 moving average on the hourly. We are getting a bit of a squeeze going into the close, but it wouldn't surprise me if we have to do some sideways chop maybe next week if the market's going to move higher. If these areas up here are rejected sharply, that would be obviously a major negative. But if we see a minor pullback, maybe some chop, that could be telling you that the market wants to make an advance. However, we did see kind of a choppy period here, and the market rolled over. So we'll have to be very careful, be on guard. I mean, I think it's a nice move here for the market. This is clearly all short covering. You can see just by the price action, when you have action like this, this is just short covering here. A little bit of consolidation. We'll probably get a squeeze into the close. We got about 5-6 minutes left. But in any case, nice move for the market, but don't let your guard down. I'm still in the camp that we're going to have a very turbulent first half of the year. We're not necessarily out of the woods. We're not going to just go straight back to all-time highs. I don't think this is V-shape anything, personally. Doesn't mean it can't happen. But, don't get cocky in this situation if you're long. Make sure you have, a game plan in place, and don't over-leverage yourself. Anyways, here, let's flip over. Let's talk about some sectors here. Start off as usual with the semis. So semis, obviously, nice day. AMD was up over 3%. Nvidia, nice day again, up 1.6%. That was another one of those that had such a huge move yesterday. It's kind of stalled out just a little bit today here, but nothing out of the ordinary. Even Intel had a nice day, filling that gap there, hitting that 20 moving average again. So this is kind of your breakdown area. This may need to stall a little bit before it can make an advance if it wants to. IGV. So up another 1% or so, just shy of that today. But look at that candle from yesterday. We were talking about that yesterday. That was my favorite chart from yesterday. I mean, just that is incredible candlestick from yesterday. But IGV maybe has some upside into that 340, 345 area. Got that 20 moving average, and this is kind of where you chopped and broke down. There's that red bar there. But again, nice little move there for cloud software. Finally getting that relief bid. Dow Transports also following through a little bit. So kind of kissing that 200 moving average. Again, may stall out in this zone. You got some supply right there. You got the 50 up, down sloping above that. But a nice move in the short term for transports. Home builders, again, finally getting that relief bid again, going back into this chop zone right here. So this is where you broke down from. This should be resistance, hypothetically, on the way back up. So maybe we can get a little bit more upside Monday, but it probably needs to pull back, as it meets that 20 moving average up there. VNQ, much stronger here. But again, maybe it wants to go up and test that 200 moving average, but you're going to have some supply in that area. Again, I'm seeing, rebounds in all these charts there, but they all kind of look the same, right? Into kind of short-term resistance, local resistance. And if they're going to move higher, they're going to need to do some backing and filling, in my opinion. Treasuries also kind of stalling out here, or I should say bond yields, stalling out a little bit after the power move yesterday. Same thing on the 30-year there. And on high yield, actually a nice move here, getting above that 20 moving average. But again, it's nice. I mean, another one of those huge candles from today, from yesterday, similar to IGV, but nice follow through. So maybe this can give the market a bit of a relief bid in the near term, seeing that high yield debt has cooled off a little. So let's look over to financials. XLF up 3%, so a nice rebound there. Broker dealers up 2%. Morgan Stanley, nice rebound, 3% there. That one really, bottom kind of fell out of that one, but you had a nice, support zone in here. But you had been chopping in this range since really August, and we tested that low, got below it, now getting back above. But this one's in a bit of a weak technical position if it can't make a higher high here. So keep Morgan Stanley on your radar. Goldman did get a nice bounce today, up 3%. This is in a much better technical position, as is JP Morgan, filling that gap there, and a nice move there, up 2.5%. Energy also getting a rebound. So again, we talked about energy banks getting a snapback rally, which is helping the S&P a little bit more so than the triple Qs. But what I'm kind of watching here now, since we've been going sideways on XLE for a couple of weeks here, what I'm watching here now is, are we setting up a bullish pattern here? And if we are, we need to, I would think that 20 moving average needs to catch up to price a little bit. And if we look at the monthly, I think a few weeks ago, I gave out that 75 handle as kind of like what I would be looking at for max resistance or max move. But we have that big red bar that we're going into, and we are coming off the highs a little bit here on the monthly. So something to watch. Energy is going to remain strong as long as there's geopolitical issues, and there is that, that kind of box that the Fed is in right now with commodity inflation, and now, the Ukraine conflict going on. If they raise rates, yeah, they could, they could put us into recession. But if they don't, it's just this total mess. So, but ultimately, I still think 75 is probably going to be max move for XLE if it gets up there. But again, that weekly, it may need to do a little bit more backing and filling, and let that 20 moving average catch up to price. Anyways, let's flip over here. So XOP, same kind of deal, just sideways action for really last month or so. OIH, a little bit stronger over the last couple of months here, but kind of stalling out a little bit here. So nothing really too different there. Crude also red today. So we printed that humongous tail candle here. Again, I don't have any sort of sell signal on crude. It may need to do some backing and filling though, if it's going to take out that high around 100. But ultimately, if we take a look at the weekly here, really nothing wrong with it other than you printed a pretty sizable tail candle here. There we go. So pretty sizable tail candle there on crude, as there's the market closing. Let's take a look here at the spiders. Yeah, so we got a little bit of a pop into the close. We'll go back to that later. But nice tail candle there on crude. Again, may need to do some backing and filling if it's going to take that out, but we'll continue to monitor that tail. Nat gas. So let's look on the daily here again. Still inside of this this big green bar here that we've been watching. So potentially a micro bullish pattern. And again, if it takes off, maybe it gets up to 5. A measured move here would take you up to 560, but the smaller inside bar here probably get you up to $5. Anyways, let's move on here to the dollar. So dollar index pulling back a little bit. We did take some profits on those UUP calls that we had yesterday, so that turned out to be a nice decision there. Getting into double top, I still think the dollar index does have another leg up in it, but again, a lot of supply in that 97, 97.50 area. That's evident right now. as it could not get through that twice now. But, you know, if you do more backing and filling, there's nothing to say it can't push through that again. Let's take a look at the monthly again, as we got rejected yesterday. And this is what we've really been going off of lately. Sorry, we're getting a lot of volume in here as the market closes. There we go. Oh yeah, so nothing really wrong with the monthly here. We have one more day left in the month. So again, nice bullish pattern there on the dollar index there, monthly chart. All right, move over here. Let's talk about gold. So gold continued to pull back a little bit today. Nothing major here, just kind of an inside day. But again, following through and another major tail candle. So, you know, we talked about this yesterday. That tail on crude, that tail on gold kind of suggests that maybe fear is subsiding a little bit here. We did have kind of a max fear move here in gold yesterday and in oil. If we look at the VIX here, the VIX came in pretty sharply yesterday, as it did today as well. And again, apologize here for the slow charting here. There we go. So that was a major reversal there in the VIX today, and it did follow through to the downside a little bit. First test is going to be around 26, 25. We'll see if they can, you know, defend that area. But if you get through that, it's probably down to, you know, 24 and then 20. But I don't know, we'll continue to monitor that. But again, max fear kind of did happen yesterday, so not surprising to see gold continue to pull back a little bit. It may need to do some more backing and filling, but we'll continue to watch that 19 area. Monday's close is going to be very important there. Silver did, again, we talked about this yesterday. Silver did exceed my upside targets a little bit. I didn't think you would be able to get through that 200 moving average so quickly, but of course it stalled out here at that 2550 area. You got all this chop in here. It wasn't going to just get right through that. At least not very likely, although we'll see if it can put in a higher low here. We'll see if it can do some backing and filling in the near term, but ultimately actually had a little bit stronger of a session today than gold did. But all the precious metals really, platinum and palladium, the same thing. You can see they pulled back very sharply off the highs. So if they're going to move higher here, they're probably going to need to do some sideways consolidation, maybe a little bit of a pullback or something like that. There was platinum and palladium here, same kind of deal. And again, apologies for the slow software. Got a lot of volume there into the close. All right. Yep. So palladium tried to break out yesterday and then kind of pulled back a little bit today. Copper is still kind of sitting inside of this red candle here. So still printing that inside bar. We'll see if that develops a little bit more. But yeah, not the best look here in the short term for copper. Anyways, let's flip over here. And we'll go over crypto really quick. So Bitcoin didn't really do a whole lot today. Just a little bit of follow through, just like everything else. Nice tail candle yesterday. Same thing with Ether. Printed that tail candle, got a little bit of follow through. Closed inside of yesterday's range though. So maybe, you know, a little bit more of a pause there on Ether. But again, we'll continue to watch this weekly pattern. So you've got the pop here and then 1, 2, 3. We'll see if it gets some juice next week. But again, you really got to watch this big red bar here. If that holds, then this is still a macro kind of bearish pattern. Same thing on Bitcoin there. But for right now, we'll give it the upside bias. It's hanging in there okay. All right. So back over to the spiders. And just lastly, again, just to reiterate, this kind of area here, you got that 200 moving average. Will probably, I would assume we probably want to go up there and at least back check to that. But you'll have a sell zone right in this area. You got the 20 in there. If you get through that, you know, 445 around that range, maybe 450 on the triple Qs. The area we're looking for is about 350 to 352. So this is kind of your red bar breakdown right in this 350 area. 352. This was the low from that previous little consolidation. Then you got that pivot high at 355. So somewhere in the 350 to 355 range on the triple Qs there. The best looking index right now is the IWM, believe it or not. So you had that double bottom. It's the only one that didn't really take out that low. You made a slightly, and I mean slightly lower low here. This actually looks okay right now. So that might want to go up there to that 205 handle. You got that 50 moving average downsloping, got these pivots here, but that's a solid looking W bottom there on small caps, I have to say. So that's probably the best looking pattern here out of all the major indices. And we'll continue to watch that one. The diamond here, big lower low. That was hurt yesterday by banks and energy. Goldman and JP make up a pretty big portion of the Dow. So, and they were down pretty big yesterday, but Dow getting a nice rebound today, up 2.5%. So downside or upside targets there would probably be in the 347 area. That was where your pivot lows were from that breakdown, maybe 345 or so. Anyways, guys, yeah, I don't think the market's out of the woods, but nice little relief rally. And, you know, buying fear does work, and it will always work. So, you know, I know a lot of you guys are adding at the lows with me or picking up things on discounts, but don't get too cocky in this environment. This market can turn on a dime. We could easily get more geopolitical news over the weekend that can really dictate the pace of the market next week. Anyways, guys, subscribe to the channel if you haven't already. Come find me at carnivoretrades.com. Take advantage of that 2-week free trial. And you guys have a great rest of your weekend. Take care. I'll talk to you next week.